much research on that yet. As an opening speech, I would like to bring up your attention to the challenges and the need for research accordingly. I fully agree with President Zhou Xiaochuan's remarks in that China has initiated a multitude of macro and financial policies to cope with the epidemic, not without a lot of innovations. A tremendous effort has been taken, and those policies have been proven quite effective. First, in liquidity and price support, we have seen some monetary policies delivered in an effective and timely fashion. Some of those measures are designed to stir up aggregate demand, and while other measures are playing the part of relief. Well, in general, they are working. However, there are higher expectations on what the financial sector can do. There are hopes or expectations that there will be a better transmission mechanism for the monetary policy. For SMEs hard hit by the epidemic, there should be more targeted relief, assistance, and help. Moreover, we should not overdo those measures in order to save room for future measures. We have heard suggestions for room for improvement. For example, for some businesses and individuals, they should be supported by the financial sector, but they haven't, or the support is not adequate. According to some other criticisms, some of the relief funding has flown into the capital market, or asset market, rather. According to another observation, some funds are simply circulating within the financial sector instead of supporting the real economy. Well, I think all those observations are reasonable in their own way, and everybody's hoping financial sector will be playing a bigger part. According to some other views, there are worries that an accommodative liquidity environment in the future might cause some negative consequences. And there is some free-riding behavior in that some businesses and financial firms have had their inherent problems. They are in distress. However, they might take advantage of the current policy measures targeting the COVID-19 epidemic to get rid of their own problems. Well, on that, talking about the pandemic itself, it has mounted an unprecedented challenge without any history reference to refer to. But still there are some sources of inspiration as well. For example, back in 2003, during the SARS outbreak, we had initiated similar liquidity and financial support measures. And we have seen that some unintended consequences transpired. For example, some of the funding flew into the asset market. In June 2003, the PBOC issued document number 121, emphasizing the need to restrict loans to the property sector. at that time, for some untopped building projects, the future transactions were rampant and prosperous. And then the bank reserve requirement was raised by 1 percentage point by summer. And in April, the following year, because of the controversy of those stimulus policies, financial regulators at that time froze all the new loans for about 1 week, sending shockwaves across the society. In a nutshell, all those points and experiences are up to further deliberations. They are subject matters for our research. For the current outbreak of the COVID-19 epidemic, it is unique in its own way. For previous crises, those crises were caused by economic factors, and then the financial sectors and institutions got the contagion effect. But this time around, the shock was felt by the SME sector the most, resulting in job losses. For example, in some other economies, this is quite salient a phenomenon. With our effort to strengthen the financial institutions and the financial sector, together with market-driven reforms, those measures are targeting normal economic cycles, including financial crisis, but we have not taken an COVID-19 engendered crisis into our scenarios. Therefore, the current transmission mechanisms are not effective enough. There are some loopholes or soft patch in implementation. We need to strengthen the following areas of research. First, we need to study how to make financial sector and financial institutions respond better to fiscal policies. At this point, fiscal policies could be more effective, but the transmission mechanism of fiscal policies is inadequate. We used to rely on breaking up the fiscal funds into different tiers with some misappropriations. The existing financial institutions should link up more closely with the grassroots real economy entities. Innovative methods should be pursued to help financial sector better serve the real economy in response to the COVID-19 outbreak. Whether it is fiscal or financial policy, nothing is perfect. With whatever measure, you cannot ensure 100% of the funds are put to where it is needed. There could be some loss in the transmission or a misappropriation, and we shall not retreat from the market-driven reform as the general direction. In addition, it is noteworthy that when financial institutions are trying to overcome the effects of the COVID-19 outbreak, there might be issues about financial asset quality, which might give rise to the roots of potentially another financial crisis. We need to carefully study all those possibilities. In a nutshell, we need to base our financial services more on the realities on the ground. We should stay closer to the real economy so as to find out better mechanisms for implementation and transmission. For example, there should be more coordination between the financial sector and the fiscal policies. With the COVID-19 outbreak, it has resulted in losses in aggregate demand and supply. Moreover, it has pointed to the needs for bailout assistance. Institutional reforms and designs are a process of ongoing improvement. According to our past experience, when that happens, first and foremost, we need to proceed from a clear top-level designs so that those institutions can be carried through all the way to the grassroots. In particular, for some sectors hard hit by the epidemic, there should be more targeted policies for financial institutions to follow. In addition to our day-to-day operational mechanisms, financial sectors should be equipped with emergency response mechanisms in the case of an outbreak of an epidemic like COVID-19. Moreover, there should be a mechanism to share the losses. The more clarified and well-defined it is, the more effective it becomes. In addition, we need to have a very good incentive system. After many years of market-driven reform, our financial system is market-oriented. We should devise better incentive mechanisms instead of vaguely issuing calls or orders. And the regulatory mechanisms should be adjusted accordingly as well. I think in contrast to other economies, in China, there are some unique characteristics. During our financial reforms back in the 1990s, we have had policy-driven banks, and later we divided the banking system into three categories: policy-driven banks, development finance banks, and commercial banks. But what is a policy-driven bank versus a development financing bank? There are a lot of controversies about those definitions. A couple of years ago, we issued a document specifically on that. However, the definition is still not convincing enough. It is still in a quite awkward position. During the COVID-19 outbreak, financial institutions have done a lot, such as the extension of existing loans with automatic extension, debt relief, amongst other measures. However, there's room for improvement. Intuitively speaking, if we have policy-driven banks, as well as China Development Bank, including China Development Bank. I think those banks should be tasked with carrying out some of those policies. When those banks were formed in the 1990s, and later they became development banks, in terms of their functions, they are not designed as emergency response financial institutions. They focus on different subject matters, such as State Development Bank, Exim Bank, and Agricultural Development Bank. They focus on different sectors. And in order to prevent unintended consequences of their behavior, we are restricting their activities in their respective mandated sectors and industries. And there is no clear-cut boundary. Over the past two decades of development, there's been ongoing evolution. And in some cases, some of those banks have changed a lot, different from the original mandate. The policy banks and the development banks in China have not linked up closely with reality on the grassroots. They were not allowed to set up too many branches. With the COVID-19 outbreak, we need to strengthen support for the SME sector, including some individuals. And the policy and the development banks have information asymmetry to help those people out.
therefore inefficiency in implementation, and then the repayment mechanism also is not well defined. Now, for the policy lending, in name, should be approved by the government before operating. And the others can be defined or understood as development-oriented, however, without necessarily government guarantee. And then for the regulatory policies, there are unclarity. There was a point in time of the relaxing of regulatory rules. However, there were problems. It may cause some arbitrary practices and then regulatory arbitration. More recently, we've had more innovative businesses within the policy banks and development finance institutions, including the student loans and shantytown renovation, so on and so forth. So how can we best make use of the policy institutions and development banks? There is no foregone conclusion. And one case is very important, student loans. CDB, China Development Bank, take a wholesale approach despite lack of physical establishments across the country or traditional advantages as commercial banks. Wholesale can be used as a form to generate student loans. Finally, commercial lenders. There has always been controversy, especially in the market-driven reform, because commercial banks were not thought to be fit to conduct policy-oriented businesses because of their some commercial benefits and interests. And then the issue of moral hazard. Once there is problem, the government is turned to for bailout or rescue. Now, policy banks versus commercial banks, in implementing national strategies, can still be viable options. For instance, the counter-terrorism financing, anti-money laundering, and foreign reserve control and regulation, and also the P2B defaults. All these are national strategies facilitated by the commercial and policy lenders. If well designed, these efforts can be well implemented by these commercial and policy lenders. However, the goals and principles and scopes should be well defined, clearly defined, as elaborate as possible, with a possibility or a viability of oversight and regulation. And secondly, incentives should be appropriate and effective. Thirdly, risk sharing. The ultimate loss sharing, identification of the backstop for losses so that the existing commercial financial institutions can play a bigger role under a more clearly defined roles and responsibilities, especially in the context of combat against the pandemic. I meant to talk about some debt overseas, but maybe it's a topic more appropriate for other speakers. all in all, new challenges in the new context of pandemic, I hope that the PBCSF of Tsinghua University, as well as the entire financial sector in China, can take this as an opportunity to study these issues in identifying the areas for further improvement so that going forward, we can do better in combating any new challenges. So much for my sharing. Thank you. Thank you, Governor Zhou Xiaochuan. Now I'd like to give the floor to Mr. Xiao Gang, member of the National Committee of CPPCC and the former chairman of CSRC. Distinguished guests, dear friends, good morning. It's my great pleasure and honor to be at this Global Finance Forum. I'd like to share with you the response to the pandemic as well as the challenges in post-COVID-19 era. There are 3 topics in my presentation. Number 1, the overview of the shock triggered by the pandemic, as well as the responses by different economies.